You've saved some money and now you want to invest. You've been thinking about it for a while, but you don't know where to start. You feel overwhelmed by all the different financial options and brokerage platforms out there. Well, then this video is for you. I'm going to show you how to take the first step in kickstarting your investment journey by opening a brokerage account. This video will be tailored to both UK tax residents and expats, and will outline the different options and considerations when opening a brokerage account. I will also take you through which brokerage accounts I use and recommend, and at the end of this video, I'm going to be investing $5,000 of my own money to show you firsthand how to invest using a brokerage account. So let's get into it. Getting started in investing can be daunting. Most of you watching this already know that investing in the stock market can help you build future wealth and give you the freedom and options to choose what you really want to do in this life. But where do you start? And how do you choose a brokerage firm that works for you? There are so many financial apps out there, how do you know which ones are best? As my audience is split into two main categories, expats like me and UK tax residents, I'm going to specifically cater this video to both groups. I've placed chapter markers in the video timeline, so if you want to skip ahead, then you can. But I do think there's value in watching the whole way through. I just want to start by saying that I've been in your exact shoes. I first started investing when I was living and working in the UK 10 years ago. But 7 years ago, I moved out to Qatar in the Middle East and I stopped. Quite frankly, I was nervous and unsure about how to do it. I wasn't sure what the rules and regulations were, where to get started, or how to set up a brokerage account as an expat. I knew that the Middle East was full of unscrupulous financial advisors who aren't regulated to the same standards as the UK and may not have my best interests at heart. So instead, I stuck my head in the sand. I focused on other goals, like building up an emergency fund, buying a buy-to-let property, and saving for an incredible wedding. It took me 6 years before I got started again. Do I wish I'd started investing again sooner? Of course, but I have no regrets with the decisions that I made. I know that there will be a number of you who are in the exact same position as I was, and I hope by showing you what I've done, it can help you get started. By the way, if you're new to this channel, then thank you for watching. My name is Liam Trump, and on this channel, we talk about personal finance and investing, and I take you on my personal journey to financial freedom, warts and all. To get started in investing, you need to set up a brokerage account. These days, that basically means a website or a mobile app that will execute your buy or sell orders on stocks or bonds or any other financial instrument. There are hundreds of brokerages to choose from, but it really comes down to a few key things. The first thing is fees. How much is the brokerage account going to charge you for opening and maintaining that account? And how much will they charge you every time that you want to execute an order? In general, the lower the fees, the better, especially as a starter do-it-yourself investor. Number two is how secure the platform is. You want to make sure that your funds are safe when investing through them. That means that they should be regulated by one of the global bodies, such as the FCA or the SEC. Lastly, and number three, it's what added services the brokerage can offer. This could be market research or stock research, or the ability to be able to trade in other financial instruments like CFDs. Now personally, I don't put any weighting into these because I keep it simple. But if you want those, then it could be a consideration. Now, there is a lot of detailed information on each of the brokerage accounts, but I'm not going to go into it. For me, the key is keeping it simple and just getting started. The reason people don't take action in part is because they try and overcomplicate things and they get overwhelmed. So just keep it simple. So first, let's talk about brokerage firms as an expat. As I mentioned earlier, after moving to Qatar 7 years ago, it took me 6 years before I started taking action. The key for me was reading the book Millionaire Expat by Andrew Hallam. Andrew himself is an expat teacher who became a millionaire through index funds, and his book is a no-nonsense guide on how to get started. I highly recommend it, and I've linked it in the description below. I then attended a live talk that Andrew held at an international school here in Qatar. During that talk, he mentioned the services of Mark Zorrell at Plan Vision, who, for a flat fee, got me set up with a brokerage account, Interactive Brokers. He also recommended some index funds that I invest in based on my personal situation. Yes, you can do this yourself and save yourself the $149 fee. But to take away the headache and provide the reassurance of setting up correctly, I think it's a no-brainer. I'm in no way affiliated with Mark or Plan Vision, but I am a customer of his and I highly recommend it. I've linked to his website in the description below. So whilst I'm with Interactive Brokers, there are other options available to expats. Other brokerages that are recommended include Swissquote and Saxo Bank. All three of these brokerages meet the requirements of being low in fees, secure, and offer a suite of services. I've linked to them in the description below. Many people will debate on the benefits and disadvantages of each, but in general, they're all like for like. And I wouldn't get too hung up on it. I would just choose the one that most appeals to you. If you're a tax resident in the UK, then you have a lot of options available to you, but you want to make sure, again, that they meet the 3 main criteria. It'll also depend on whether you want access to a phone app or you're happy to trade through an online platform. Now for me, I promote the strategy of buying and holding index funds for long term, so having instant access to a phone app isn't necessary. However, I do see great value when getting started in having access and being able to see your investments grow over time to help motivate and encourage you to continue and learn more about investing. If you're happy not to have an app, then I'd recommend D.I.Y share dealing. I set up an account with them over 10 years ago, and today it's still one of the lowest cost trading platforms that are out there. It's a traditional online platform and costs £25 to set up with a £5 trading commission for every deal that you execute. There are no inactivity fees. I say that iShares is the traditional model because they're new kids on the block. With the development of fintech technologies in the UK, there are new phone-based only apps which are really shaking up the brokerage space. One of the leaders of these is free trade. Free trade meets 2 of the 3 main criteria. They're extremely low cost and they're secure. They are planning to bring out a premium model which I assume will include research and additional services, but they don't have that yet. So let's go into a bit more detail. Let's talk about costs. Free trade is an appropriate name because it's free to trade on. You don't pay an account opening fee or ongoing fees for a normal account, and you don't pay commissions on every trade that you execute. I can't overstate how incredible that is. One of the biggest issues in the past for new investors was that unless you were investing large sums of money, the fees associated with commissions and running the account could be a large percentage of that investment, and fees can be a drag on your overall portfolio return. Let me give you an example. If you had £100 to invest in and you wanted to buy a share, then on D.I.Y, which is one of the lowest trading fee brokerages, the commission of £5 to execute that trade would be 5%. So the purchasing power you have actually is £95. That means the stock you purchased has to go up in value by at least 5.3% just to break even. That's why, in the past, I would have recommended that you invest at least £500 to £1,000 at a time to reduce the commission drag. But free trade changes that massively. Without trading commissions, you can now invest with as little as a £1 investment. They've also recently rolled out fractional share trading. That means if you wanted to purchase Tesla stock, which is trading at $1,200, but you only have $12 in your account, you can purchase 1/100th of that share. Sounds a bit too good to be true, right? So hopefully the question you're asking yourself now is, how do they make money? Well, like many tech companies, they're looking to use external capital to grow the company, increase user base, and then monetize thereafter. But they are generating revenue already through a couple of main sources. Number 1, they do charge a small FX trading fee. FX is foreign exchange. So that basically means if you're holding British pounds but you want to purchase US stocks, then you have to convert from British pounds to US dollars, and they charge 0.45% above the spot rate. And I'm assuming that they take some margin out of this. Number 2, they do charge a £3 account fee if you want to invest through an ISA, which I highly recommend. And I'll be doing another video at a later date on the benefits of investing through an ISA. The next question is free trade safe? Well, yes. As an FCA regulated firm, that means they must segregate the money that you give them from their own personal funds, which means should the company go bust, then neither they nor their creditors can access your funds. It is also backed by the FSCS, the Financial Services Compensation Scheme. Whilst very unlikely because of the segregation of funds, if something was to happen and you were to lose your funds, then you're backed by the government up to £85,000. I should say at this point that neither of these protect you from losses that you sustain from investing in the stock market. Just remember, your capital is at risk when you invest. However, as I've always said on this channel, we try and reduce risk by investing in low-cost, diversified index funds which have been proven to increase over time. Unfortunately, I'm no longer a UK tax resident. But if I was, then I would set this account up in a heartbeat. And if you're a new investor, I'd highly recommend that you take a look at it. I'm so impressed with them, in fact, that I got my dad to set up an account for himself. One of the benefits of the free trade app is that you can refer other people to join, and both of you will get a stock worth between £3 and £200 in a lucky draw. So if you want to set up a free trade account, then email me on the email address that I've listed in the description below and I'll send you a referral code. Both you and my dad will get a free stock, and it will mean that I don't have to buy him a Christmas present this year. Okay, so that's my quick and dirty summary on which brokerage accounts you should set up and which ones I recommend if you're an expat or a UK tax resident. I hope you found that useful. My question for today is, if you have a brokerage account already, which one do you use, do you like it, and why did you choose it? And if you don't have a brokerage account already, which one do you like the sound of? Let me know in the comments below. Alright, now as promised, I wanted to show you how I invest on a monthly basis using Interactive Brokers, my brokerage account. So let's jump over to the computer and get started. Hi guys, so welcome to my Interactive Brokers dashboard. What I want to take the opportunity to show you is how I invest in index funds on a monthly basis, because I think I would have found this extremely useful when first starting out. I have removed some of the crucial information such as portfolio size to save for a video at a later date. But as you can see on the left hand side, I have been saving quite a lot of money over quarantine and I have £5,500 to invest into the stock market. So the index fund that I'm going to be purchasing today is the iShares S&P Small Cap 600 ETF. Now this is an index fund which will track 600 of the small cap stocks in the US. It will help complement my overall portfolio, which is based on VWRL index funds. It will give me more exposure to small cap markets, which historically, whilst riskier, also has a higher reward. Now, this is not a recommendation for you to purchase it. I would recommend that you speak to your financial advisor, but this is what I'm purchasing today. Okay, so if we head over to the dashboard again, in the top right hand corner, we will type in ISP6, which is the ticker symbol that we want. Then it will bring up the index fund page itself to purchase from. The thing I really want to highlight here is the price in the top left hand corner, 4380. Now this is not in US dollars or British pounds, this is in GBX. This is GBX is a currency which is basically the pennies and not the pounds, and it sometimes appears on small cap stocks that you purchase, and it may do or may not be on your brokerage account. But we need to take this into consideration. Now the next step I want to do is actually purchase the shares. So I'll click the buy button and this will bring up the order ticket. Now here I'm not going to go into too much details here about all this steps, but it's well worth looking into. I just want to give an example. But I can choose either shares or British pounds that I want to purchase. For this example, I'm just going to use the quantity of 100 shares. I put in the limit price, which I'm going to set just above the ask price. So I'm going to put in here 4382. Actually, I may need to try and do it a little bit. Let me try with that, but it may need to be around about 4388 in order to execute the order. That then will show you the price that comes up, which is limit price times quantity. So 100 times 4382 will be a total purchase of 4,380, a little bit below what I said, but it's an example. Click submit. So after clicking submit there, you'll see that the order has been fulfilled. I should add at this point that in post editing, I have actually edited the video for brevity, and I did have to reissue that order ticket as expected with a slightly higher limit price. So the average price that I've paid per share is 4,388 GBX for a total cost basis of £4,390. Now the reason I'm showing you this, guys, is not to show off. What I want to do is actually show you how simple and easy it is to purchase shares. Other interfaces such as free trade may be even easier than this from what I've seen on other videos. But the idea is it gives you a flavour and understanding of how to go about purchasing shares, try and demystify and make it easier to see what's going on. So I hope you found that useful. So that being said, thank you so much for watching. If you haven't done so already, hit that subscribe button for more weekly content on personal finance and investing. And if you know somebody who would like this video, then please share it with them. And as always, let me leave you with a quote. The scariest moment is always just before you start. Thank you so much for watching. Until next time.